course, it's not far off from that March jobs report that will be released in just about 15 minutes' time. A preview of what to expect in the currency plays today. We're joined by Nick Twydale from FB Markets here in the studio. Nick, great to go and see you there. Can we start off with that Aussie dollar, because it's come off the ball a little bit, but of course, no, it wasn't that long ago, last week in fact, that we were above 76 cents and looking to go and push even higher.
Yeah, definitely. I think the Aussie's been the darling of the currency markets really for the last few months. If we look at how the Aussies performed both against the dollar and against the crosses, it's gone really great guns and obviously helped on by commodities. I think jobs data today is going to be very, very crucial for us. We all know where it is, or we hope we all know where the job numbers are. I still think we're going to see a little bit of an uplift, and I think that will help Aussie continue to move to the top. We saw a decent rally in some of the other currencies as well overnight. Dollar just taking a bit of a breather. I think really Aussie, the trade's still coming on the crosses. I think there's a lot more movement available on the crosses. I think we're all pretty much set on where the dollar is. And then once again, we'll move away from the Aussie focus later in the session, and we'll look to be the euro pretty sharpish.
So just have a quick pop at Aussie yen, as of course that's on either end of the risk spectrum. Normally Aussie is a risk-off trade, but as you just alluded to, it's certainly defied that in recent months.
Yeah, that correlation's been completely thrown out with the bathwater, really, hasn't it? It's one of those sort of interesting paradigms, I suppose, that we've seen recently when you've got stock markets still moving to the top side, but you've got a war in Ukraine, and we've sort of just let that go, and Aussie's just powered to the top side, and that yen move, and obviously yen crosses have been powered by that massive move we've seen in dollar yen, and even now I think we've just seen some moves on the fix in Tokyo that's taken it further to the top side. There's not really much on top to stop that one. So Aussie yen has got to be a favourite, I think, and you know, it's something that currency traders are watching very, very closely.
So what's left in terms of a surprise, I guess, because remember Kiwi was the underperformer because the RBNZ's ahead of the curve. Now you have to say the RBA is way behind the curve. If they finally have just say they bring us a tightening bias next month, could that be another leg up, or does Aussie know that the RBA is behind? And what's the psychology here?
I think so. I mean, if you look at the Aussie chart, like we've been range bound for a long time, and the difference is that we've seen other currencies sort of fall off a cliff, especially against the dollar. I think you're right. I think we all know the RBA is behind the curve, and that's almost been priced in. So even if they do start coming to the party, which I think they will, and I think they might come in a bit of a hurry, I don't think it's going to see too much topside acceleration to the Aussie. I think the key is going to be commodities, as it is a lot for us. So funnily enough, we might see another one of these sort of paradoxes where we start to see tightening from the RBA, but if the commodities start to take a hit from these inflated prices that we've seen, then maybe the Aussie comes off. And once again, I'd probably be looking to the crosses for the real power trades on that.
Just quickly for before the ECB meeting tonight, the euro. We know that it's been under a lot of pressure. It still seems to be a bit of a sell on rallies play. How is it looking technically at this point?
I think it's still a sell on rallies, as you said. I think we've had a bounce overnight, and I think that's probably a bit of profit taking going ahead. It makes sense ahead of a big risk event like we've got. I think the fundamentals are still nicely aligned from the States and from Europe, that we will continue to see the euro just start to grind lower. And I think parity is something that we're going to be looking for the medium and long term. I don't think we can go any other way from that. There would have to be a massive shift, probably in US data, to be honest. Europe, as we said, we're looking for them to tighten, but it's very difficult for them. They're sort of they're stuck in the rock and the hard place. Yeah. So I anticipate a little bit of volatility with the ECB tonight, but I think it's just, if we get any rally, it's just going to be better levels to sell into.